about 25% of my portfolio is some type of conservative 1-1-2 strategy in futures. If you want to know what that is, or you don't know what it is, you could consult Tom King or Sweet Bobby to get some good information. They're two thought leaders that are out there in the 1-1-2 strategy. Probably about 10%, 15% are in strangles, neutral strangles in commodities, oil and gold primarily. Thanks to Ed, Notional Ed, and he's on my Discord. I let T-bills run in the background, and they only use for me, a T-bill ladder only uses about 1% of my buying power, and also I think Sandra is a queen of T-bills and also does some BIL. And then about 10%, 5 or 10% of my portfolio are in bearish spreads, which would be a poor man's covered put. And the iron fly strategy fluctuates between 10% of my portfolio to 20%, and I reinvest the proceeds back into that strategy. So that's the big picture of kind of my strategy. Today I'm going to be talking about iron flies. And the question, what underlying do you trade and why? And I trade SPX. It's the S&P 500 holding. It's huge leverage, but it's cash settled. And if you don't know what cash settled means, it's impossible to get assigned long or short stock on SPX. So every day at the end of the option day, at expiration, it settles to cash. Technically, it's in the overnight when they do their accounting, but by midnight the next day, all of that cash will either come in or out of your account. What is an iron fly? You are selling 4 legs, 2 puts, 2 calls, primarily at the money, and you're buying wings. So this is kind of a diagram about what one iron fly sold at 53.45 might look like, with an upper wing at 53.85 and a lower wing at 53.05. So here's another diagram about what is an iron fly. It is a 4-legged trade where there are 2, both a put and a call at the money. So in this case, it's 53.45. Let me choose this. And so at 53.45 are the 2 shorts. The upper wing in this case, the put would be 40 away, and the call would be 40 away. And these are the typical premiums that might be collected. So this is an actual date of June 10th, 2024, where if you got into that iron fly, you would be collecting $16.78. Now, you may say, well, why do you use wings and why don't you just trade it naked? Well, maybe if I was Warren Buffett, I might trade it naked. But trading this naked takes a lot of buying power. So it lowers your buying power by using wings, and you get greater capital efficiency. So several of you, if not most of you, or some of you know that the way that you calculate maximum loss is the width of your widest wing minus the credit you collected is your max loss. Now, I can count on one hand, having done thousands of iron flies, I've only had a handful of max losses, and that was due to it was due to a platform error where they canceled my closing order, and I didn't know I still had it. Thank you very little. So they would blame it on me, but I would blame it on them, and we'd go round and round, but I just let it go. So that's the reason for why we have wings. And the width of our wings are typically most often at 10 a.m. They're most often 50 wide. Occasionally they're 50 wide on the puts, and 40 wide on the calls. The reason puts tend to hold their value a little bit further out than calls do. At noon, they're typically 40 wide, starting at about 2 o'clock Central Time. And all times I list are Central Time because that's, I live in the Dallas Fort Worth area. 2 o'clock are typically 20 wide. And 1 o'clock might be 30 wide. So as a general rule, once wings are 40 cents, I don't go any wider, but 50 is my maximum width. Now, as you guys have questions throughout the presentation, feel free to text the questions in. I'll take some of them at the end, or Sandra and Twee that know a lot about the strategies could also kind of answer some of these questions in the text. One of the things I do that's very important is to avoid overlap of strikes, as that leads to consequences with toss. And what I mean with consequences with toss is if I have a close order and it overlaps with a strike, toss will cancel an existing close order, and which creates some auditing problems. So to avoid that, I just make sure that none of my strikes overlap with others. So the next question might be, well, what was your starting capital and how much would I need to start with this strategy? Well, in May 2023, I allocated about $60,000 of buying power, trading this in 3 different accounts. And I started trading 6 contracts. That's 2 contracts in 3 separate accounts. To trade this strategy, it takes about $8,000 to $10,000 of buying power to trade 1 contract, and you'll maybe understand why. And that creates kind of it creates a budget, and that budget is for up to 3 to 4 flies at any one time. In January of 2024, and is my audio all right? Can you hear me all right? Give me the okay, yep. Sandra. Okay.
Yeah, Dale, we can hear you.
Good. In January of 2024, I added 3 more accounts with 1 contract each. So consuming about $90,000 in buying power. So total assets under management, $750,000, of which Ironflies took up at the beginning approximately 90,000. So what is that? Close to 15% allocated to Ironflies. So how's your performance? Well, this is a cumulative income starting in April 24th, 2023 to present of June 7th. And we've gone up a little bit since the last 2 days. We've had some winning days. But as you can see, this strategy is not, it's one of my most profitable strategies, but it's also not for the faint of heart, because you have some significant drawdowns. So you can see February 2024, I mean, here's a drawdown that was almost from 580 down to 200. Then we went on a ramp up from 200 to December of last year, peaked at like 1.1-ish. Let me put this here. So here's like a 1.1. Then we took a drawdown to about 780, peaked up back to 1.1, drawdown then to 580. Then on this huge ramp up here, almost 1.4. Then we had 2 of our biggest losses ever back to back. The last FOMC and the day after, which created some scar tissue on all our rear ends from down to, looks like, what's that, 650, ramped back up to 840, and now we're up to close to 650, 670, close to 700 now. So you can kind of see, a profitable strategy over the year to date, but with significant drawdowns. So here's some performance by month. Here's some overall statistics. The daily win rate on the strategy is around 60%. Now that doesn't mean the fly win rate. That's every day that we trade this, 60% of the days are above zero. Over here, you can see the average win per contract on a winning day. Over here, you can see the average loss per contract on a losing day. The first thing I notice is that the average loss per contract on a losing day is not significantly larger than the average win on a winning day. And then you see the largest wins we ever had per contract and the max loss we've ever had per contract. Here's a form of a Monte Carlo simulation that was done on my IRA that shows, over here is the trading day. And Paul Gunderson put this together for me. So it shows you we're tracking here pretty well. There's a minimum, a maximum, and over 100 occurrences, approximately the average of 100 occurrences. And the growth rate is tracking pretty closely to that forecast. So you may ask the questions, well, what are the reasons for the drawdown? And first, I'm not absolutely sure, but my hypothesis is that on those days where we took big drawdowns is that realized volatility was greater than expected volatility. And some of the big drawdown was when I experienced that largest drawdown, I had ramped it up and was trading 13 contracts in each account. And I'm back down to 5. So what's my growth strategy? Well, in the beginning, I think I was irrationally exuberant, and I thought, well, every week I have a winning week, I'll just go up a contract. Every week I have a losing week, I'll go down a contract. And so, that seemed to work real well. I didn't envision the two largest losing days ever, back to back. And that kind of threw me for a loop a little bit. And so I immediately reduced size. Currently, I'm now back down to trading 5 contracts in the 3 largest accounts, 2 in the mid-sized account, and 1 in smaller accounts. If you add them all up, it's trading about, every time I put on a fly, I put on 20 contracts. So what's your process? Kind of here's the meat, and there is a level of complexity with the process. So if you don't immediately understand it, you want to come into a Zoom room, observe it for a day. In order to understand anything, there's kind of like a tell, show, watch it being done, and then try it on some type of simulator, and then try it for real. So imagine you have a glass of water and a pitcher and you're pouring the water. Where would you aim the water? Anyone? May sound like a stupid question, but where would you aim the water?
In the middle.
In the middle. Ding, 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 ding. And so now kind of imagine that the pitcher is the market and it's moving around. So now if the pitcher starts spilling over the edge of the glass and you didn't have control of the pitcher, but your goal was to catch the most water, what would you do?
Put another glass next to it.
Oh gosh, you're a genius, Sandra. You'd add a second glass. So in this case, our profit zone then becomes the edge of this glass and then the edge of this glass. So as long as the market stays between those two levels, we're doing great. And so now, assuming that things continue to move, and at some point you could add a third glass. So really what we're doing is, yeah, so if we got to if we got to this point here with the water, what we would then do is close this one and we would reopen another one to the right. So that would be the third glass. So thank you very much for that. And I'll check periodically to make sure my sound is working. So starting a strategy at 10 a.m. The first number I'll always use is the price of SPX. And in this case, it's plus or minus movement of 7 points. So if our first fly was at 45.15 and SPX moves 7 points, where would SPX be trading? If SPX moves up 7 points from 45.15, where would SPX be trading?
45.22.
45.22. So if SPX moves to 45.22, we would keep the 45.15 fly. We're holding that one, and we would be adding a 45.25. So now we're flying both of those.
Okay.
And if price goes up and hits 25, we would drop the 15s. If price hits 15, you would drop the 25s. That's the most basic strategy that we have. So it gives you an add and it gives you a close dynamic. So let's say price moves up to 45.15. I'm sorry, to 45.25. What we would do is drop the 45.15s and we would keep the 25s. And then we go to plus or minus 7, lather, rinse, repeat. Same process goes if it goes down 7 points. So if 45.15, if the price goes down 7 points, it's now trading at 45.08. What do we add? We add the 45.05s, keep the 45.15s, and we're flying both the 45.05s and the 45.15s. These two. Then if price goes back up and hits 45.15, we would drop the 45.05s. Or if price goes down and hits 45.05, we would drop the 45.15s. And that's really what this diagram suggests. And if and when you did drop that and you got one fly, then you can do lather, rinse, repeat. And it's this entire process that we do from 10 a.m. until 1 o'clock Central Time. This is probably the most complicated portion of the strategy, is the drop strategy and the add strategy. So I'm going to try several different analogies and metaphors to kind of help you understand it, the diagram, and then I'll give you some real life examples. And then if it's still hazy or unclear, watch us for a day on Zoom. And I believe at that point, you'll begin to get it.
So Dale, I have one question for you.
Okay.
So the 7-point strategy, the movement, is it fixed or we keep on changing? Like we can do it 10 points someday, 12 points or 5 points?
It is not fixed, but I want you to understand it's probably the thing that we do 80% of the time.
Okay, thank you.
The other 15% or 20% of the time, I'll explain and it's all driven by how much premium that you collect from your first fly. So there's really 3 scenarios that encompass most of them, but I wanted to show you the one that's used most often because this is what's used 80% of the time.
Got it. Thank you, Dale.
You're welcome. And so this is the 3 glasses strategy. If this is the 2 glasses strategy, so the most flies you'll have on at any one time is 2. Starting at 1 o'clock, we load up. We load up with the goal of having 2 to 3 flies on going into the close. And what we do starting at 1 o'clock Central Time is we go plus or minus 2.5. So at every 2.5 movement, we're adding another fly 5 apart from your last one. So at 45.15, if price goes up to 17.50, what we would do is we'd add the 45.20s. Then if price continues to go up, it goes up to 45, 2.5 points to 45.20, we'd add the 45.20s. So at this time, we'd have the 20s, 15s, the 20s, and if it goes to 22.50, we'd add the 25s. So same thing, 45.15 down. If it goes down 2.5 points, 45.12.50, we'd add the 45.10s. If it goes down another 2.5 points to 45.10, we'd add the next one, 45.05s. All right, something's wrong about this slide. 45.15, if it goes down 2.5 points to 45.12.50, we'd add the 45.10s. If it goes to 45.07.50, we would add the 45.05s, 5s, 10s, and 15s. This slide may not be exactly correct. So here's a real example. Starting off, our very first fly is at 45.70. And so what happens is price goes up 7 points. So we add the 45.80s. So now we're flying the 70s and 80s. Now let me, spoiler alert, we made $8.49 per contract on this date. Then what happens is price goes down and hits 45.70. So when price hits 45.70, we drop the 80s. So now all we're in is the 45.70s. Down here's the timeline along the x-axis. Price continues to move slower, down lower. So it moves down 7 points to 45.63. We add the 45.60s. So now we're flying the 60s and the 70s. Price comes down and touches the 60s. So we drop the 70s. So now we're just in the 45.60s. Price goes up 7 points, so we add the 70s back. So now we're flying the 60s and the 70s. Price comes down, touches the 60s, and we drop the 70s. So now we're just in the 60s. Price goes up to 67, so we add the 70s back. So you can see how chaotic sometimes this can be. Price then goes, we go to plus or minus 2.5. So when it goes to 67.50, we fill in the middle of this cookie at 45.65. I'm going to use the analogy here of a cookie because, you know, here is it's like an Oreo cookie. Here's your chocolate cookie here at 45.70. Here's a chocolate cookie here at 45.60. And now starting at 1 o'clock, as soon as it hits 67.50, we added the creamy filling in the middle. So now we're flying the 60, 65, and 70. Now let's see what price does. Continues to bounce around. This could have to do with the reason we didn't drop the 60s here. It could have been due to some tolerance. It could have been deal with some human error, but we stayed in the 60s. Sometimes it happens so quickly, by the time you go to hit the button, it's corrected again. So price closed here and we made $8.49 per contract. Now here was a day where we made $1.12 per contract. I won't go through all of the details here, but I'll just quickly walk through it. We started off the 45.70s. We added the 60s. We flew both of them. At 1 o'clock, we went to plus or minus 2.5. We added the 65s. Now we're flying the 60s, 65s, and 70s. We come down here, we touch 60, we drop the 70s. Price continues to drift down. You know, we add the 50, go to plus or minus 2.5, we add the 55s. So now we're in the 55s and 60s. Once we touch 55, once we touch 50, we drop the 60s. So now we're in the 50s, 55s. At some point down here, we add the 45s. So we're in the 45s, 50s, and 55s going into the close. We make $1.12 per contract. Here's an example of a losing day. So I won't walk through all the details of that. I think you get the idea. So I've given you the glasses analogy. I've given you a scenario, and then three real life examples. This was December 6th, 2023. So when do we start? We start about 10 a.m. Central Time. Why? I think the market tends to calm down a little bit. You know, it's pretty crazy sometimes between 8:30 and 10. We like for it to calm down before we get started. What are other variations? A 12% profit target or a 30% stop loss. I did that for a couple years. It's pretty good. If you can't watch it all day, that's a strategy you could use. It has about a 70% win rate. Other people try this, take the money and run. You know, when they get a certain level, they'll quit that. And another variation that someone back tested pretty successfully is what they called a plus or minus zero add. And if it just ticks in that direction, you add the other fly, and that performed pretty well. So really, there's three scenarios that are most common. Scenario one, 80% of the time, is a price movement of SPX at plus or minus 7 points to add flies 10 apart. 15% of the time, and this is something we did today, is plus or minus 10 points, adding flies 15 apart. You want to do that on days when you collect over $17, but under $22 per contract. And scenario three is about 5% of the time, plus or minus 15-point movement on SPX. Remember, this is always talking about, this slot section is monitoring SPX price movement. This is always how far apart are the flies, the short strikes. Forget the wings. It's not about the wings. The only reason we have wings is to lower our buying power for capital efficiency. This is just the short strikes. 2 flies, 10 apart, 2 flies, 15 apart, 2 flies, 20 apart. 3 most common, but the most common is plus or minus 7, 2 flies, 10 apart. Our guiding principles, close a position around 80 to 90% of the break even at expiration. So if you sold a fly at 54.30 and you got 10 points for it, your break even at expiration would be 54.40 or 54.20. You just plus or minus whatever you collected is your break even and expiration. So closing something at 80 to 90% of those levels will keep your losses small. Our goal is to keep our losses small and give ourselves a chance for a big win. That's really our goal every day. So why not quit early if you're losing? Well, when you're dancing with a bear, you don't quit just because you're tired.
And you never back down. When you're dancing with the bear, you don't quit just because you're tired. The world can be cold and the nights can be long, but I'm holding on tight, I'm staying strong. With every trade I place, with every chart I read, I've got a strength inside, I've got what I need. And every step I take feels like a mountain climb, trading iron flies and SPX into the close. I won't get left behind. When the market's rough and the lights start to fade, I'll keep on moving, I won't be afraid. When you're dancing with the bear, you don't quit just because you're tired. You keep on spinning, baby, till the night expires. Through the highs and the lows, we'll go round and round. Gonna stand my ground and never back down. When you're dancing with the bear, you don't quit just because you're tired.
Etc., etc. So that was a song that I had created using AI. So what does that mean? You don't quit just because you're tired. Well, there's plenty of days where we were down and we made a huge comeback. Here's a specific day, Thursday of last week at 2:09 p.m. I was down 600 per contract with 1,372 in opportunity. By 3 o'clock, I had an $852 per contract profit, and that's not unusual. You don't really know what's going to happen. I just trust the process. I go for the large theta at the end. 70% of the daily theta lies in the last 45 minutes. And if you cut and run, you take some of the same big losses, but you miss the big wins. A famous bank robber, Willie Sutton, was asked why he robbed banks. He said, because that's where the money is. So why do we fly into the close? Because that's where the money is. 70% of all the day's theta lies in the last 30 to 45 minutes of the day. But I would just say, this may feel like I'm trying to talk you out of it, but it's really not for everyone. It's probably not for most of you. It does take some time commitment. I mean, I've lost a few thousand by bringing in the groceries or walking my dog. There's days where we've had 22 flies in one day. But at the same time, it can be super profitable. I mean, last year, my account was up 60%, and 70% of that was from iron flies. So it can be highly profitable, but it can also beat you up. We've experienced the highest highs and the lowest lows, and it does have some significant drawdown. A lot of sequence risk, which means a lot depends upon when you start. So if you choose to do the strategy, start off small, paper trade it, start off small with one contract. And if you grow it, reinvest the proceeds. So maybe every 10 grand you move up, or 12 grand you move up, add a contract. What are the benefits of trading in a community? We see things differently. We support each other. We learn together. We have fun. Here's another song we wrote about Meet the Flockers. Meet the Flockers.
Meet the Flockers, a group of traders bold. S&P 500, our domain and delight. We trade with
We call ourselves the Flockers.
precision day and night. Dancing with the bear, we don't give up the pace. When the market gets tough, we find our inner grace. Disaster diverted, we adapt
play the whole song on that, but that's the gist of it. We support each other, we learn together, we have fun. Here's one of it's called the captain's log, where every day that we trade together, and this syncs with real-time prices. So at any time during the day, you know exactly which flies we're in and what our next ad is. So just like here, it says at 52.67, we'd add the 52.70s. We're in ad mode. At 52.53, we'd add the 52.50s. So it's always telling you what to do next. So how do you play news events? On Fed announcements, I'd suggest you go to Costco. All that means is just, don't trade, do something else. On CPI day, I used to trade after the announcement. I think now I'm not going to trade at all on CPI day, and even on the last day of the month, whether it's single, double, triple, witching, just don't trade the last day of the month. Those are pretty heavy movement days, and I think it's probably best to sit out on those. And once again, it's just a small percentage of the other things that I'm doing. Iron flies, maybe 5 to 20%, bullish spreads, 112s, strangles, T-bills, and bearish spreads. So how do I learn more? You could join our Trade Diff Discord, learn together there, or trade daily with us live on Zoom. So I'm going to go ahead and just stop share now and just open it up for some dialogue questions. What questions do you have? And let me chart. I started at 5 o'clock, so it was 49 minutes.
So can you start just with one contract?
You can start with one contract. The question you didn't ask, but perhaps is on your mind, is what kind of account size do I need to trade this strategy? Well, you need at least $10,000 of buying power. I would suggest that you not start with anything less than the account value of $35,000 to $40,000. If you started with less than that and you had some really bad drawdowns, you might get down below the pattern day trading rules, which require you to have 25,000 in your account in order to move in and out of day trades within the same day. Did that answer your question?
Yes, thank you.
Okay.
What about VIX? Do you look at VIX?
Do we look at VIX? I monitor VIX every day. There's a number of things that I monitor that I look at on my charts. I look at tick, trend, ADD, ADSPD, VIX, as well as /VX. One of the folks in our Discord yesterday said he did a study looking at iron condors, and he found that VIX levels that were ideal for iron condors were 12 to 14. And if VIX was between 14 and 15 and a half, there were more losses, and you should avoid that. And he also found that 15 and a half to 17 was also good. So there's really two pockets there. But I don't find that, I haven't found any correlation necessarily with VIX where I can't trade it. It's the higher the volatility is, the more premium you get, and the different strategies that you have open to you, if that makes sense.
Thank you.
Other questions?
Have you thought about preparing the market moves during the market hours with conditional orders? Like you already prepare the next order if the SPX goes to some level.
Yeah, well, I actually work with 2 different computers. So whenever I'm anticipating something, I'll have a trade set up on a completely another computer, and I use templates in Thinkorswim, so I can send an order out to all accounts at the same time, and it immediately, when an order fills, it immediately sets up a close order for 90% of the profit received, so that real quickly with 2 clicks, I could close something quickly. I have not used some of those conditional orders. There are people within our group who have. I know SD has used some conditional orders. There's also people in our group who have built bots for themselves. Nobody in our group have built them for other people yet, because there's the requirements to get an API requires a kind of a commercial API along with some legal risk, but I'm not aware of anybody that is building systems of automated trading for other people yet with this strategy. Did that answer your question?
Yes, thank you. Can you maybe tell again what was the premium or credit level for the 80% of the time, the scenario 1?
Yeah,
Up
80%.
to 15, or what was?
Really, it's anything under 17. So
Gotcha.
for today, our first fly, we collected $18 and change. Was that right, Sandra? I believe we did.
Yes.
Yeah, I think
Yes.
Sandra had some other things going on, but we did a plus or minus 10 points, 15 apart on today's strategy, because a fly was selling for $18. And I think part of it is because, you know, there was some more volatility that was still in the market following FOMC, and there were a few Fed speakers, and, you know, they had PPI this morning. Some of that probably had some inflation on kind of what we normally collect. So anything on scenario 1 is, I think, anything where you're collecting $15 or less for a fly.
Thank you.
Dale, oh, I'm sorry.
Yes.
Dale, is your strategy more successful on trend days or range days, or you don't know?
We can still do okay on trend days. It's ideal if the market doesn't look like an EKG machine. What is an EKG machine? You know, like a heart monitor where it goes, boop, you know, up 20 points, down 20 points, up 20 points, down 20 points. That's going to be it's bad for our strategy, you know, or movements that are 15 points in one direction and 15 points in another direction. That's going to be bad for us. Otherwise, we can chase a strategy that continues to go up. It's not great for us. And those are difficult days. The ideal day is, you know, it stays within some kind of a 15-point range without a lot of bouncing around. Those are just going to be great days. You know, we've traded days where we've had, you know, 4 flies on all day long, and we flew 3 of them into the close, and all 3 of those made money. I mean, those are few and far between, but those are easy days. The bad days is when we traded 22 flies in one day, and, you know, every fly lost $2 to $3, and at the end of the day, it flies outside of our range, and we didn't even have time to get into the last one. So those have been, you know, horrendous days. So at the end of every day, I kind of try and rank it, you know, in terms of how easy a day was it on a scale of 1 to 10. The first one I described was easy days. The last one I described was, you know, the hard days, a 10 in terms of how hard it was.
is it possible to reach daily goal like in the morning and quit for a day?
Is it possible to hit the goal for the day and leave that day? And I would call that kind of a take the money and run strategy. It is, and as I kind of described to you before, some different variations. I think that a 12% profit target with a 30% stop loss is a good strategy if you don't have time to watch it or you don't want to take the time to watch it. But the downside of just trying to take the money and run is you will sometimes take as big a losses as we take if you don't have a stop loss to go with it. But you will miss out on the biggest wins that we have because the 70% of the theta is in the last hour. So if you know, they say if you can't stand the heat, get out of the kitchen. But there's a lot of really delicious things that comes out of this kitchen. So, you know, that's kind of why I used to always avoid the last 2 hours. But then I also avoided some, it's the largest opportunity. There's a Chinese word for crisis, which is a symbol that means danger and opportunity. And both are going on simultaneously in that last hour. I often thought if I could engineer an aircraft that could withstand that turbulence, then I could take advantage of that. And that's what I've attempted to do with this strategy. Other questions? And Sandra, if you go through the chat, do you see anything in the chat, either you or Twee, as you go through it, that's other things that maybe haven't been addressed?
Can I ask one more question? I'm sorry, I
Sure.
have a lot
No,
of
that's
it.
great. Go ahead. We like it.
What if like it just my schedule varies from day to day? Like, is it possible just to start at the power hour and
If
it's a
it,
day?
it is possible, I would say if you have 2 hours, then go from 1 p.m. Central Time to 3 o'clock Central Time. There's a few times when I was on a work assignment, and I call it my Denny's trade or my Cracker Barrel trade, because I was working till noon and I was finished at noon. I couldn't come home because I was way far away. And so I would just slide into a Denny's or a Cracker Barrel, pop my laptop, connect to their Wi-Fi, and I would fly the last 2 hours. I've had some really good success with that. There's once where they were cleaning up, doing a deep clean, and you know, they're mopping all around me, and I'm, you know, trading iron flies. But so it's like a 1 o'clock to 3 o'clock. I think could be very good. If you had to just had 1 hour, you could trade from 2 o'clock to 3 o'clock. The danger there is you're not going to collect as much premium. So for example, today, if you started at 2 o'clock, you're only collecting $8. Sandra, what time did you start? Did you start at 2 o'clock today? Something like
I
that.
started, I think it was around 1:30.
1:30. And the first fly you were selling was like $8 or $9.
The first fly got $10.
$10. Okay, so you're collecting a lot less premium. And you had 2 flies going into the close. What was your P&L today?
I had 3 flies going into the close because I got into those 54.40s in the last 2 minutes.
Okay, but you did have like a $700 win or something like that.
I had, yeah. I mean, I ended up the day up $512 per contract.
Okay, so it's, you know, it's possible. And Sandra she flew an hour and a half, 1:30 to 3 o'clock.
But there
So,
is danger in that, meaning that your premium's a lot lower, and if there are big moves, your losses will be bigger, and you won't have the buffer of if you would have gotten to that fly earlier and collected a lot more, if that makes sense.
So if Sandra's only collecting $8, but she's closing it at a breach of 10 on a touch, you know, her losses are going to be probably at least $4.
Yeah, my loss will be bigger.
Bigger because
yeah.
of how the small amount that she collected.
Yeah.
All right, good questions. Anybody else, or did Sandra, as you went through, or you or Twee went through the chat, did you see any other questions that would need to
see
be?
no, Dale, there's no questions in the
Okay,
chat.
okay, all right.
There was some like just to clarify, like one more time, you've touched on obviously what determines like the +7, +10, +15 mechanics, and then the dropping of that. So just to clarify, the premium we receive on the first fly especially, determines when the next fly will be placed, and if we're going ±7 or 10. So I think
So
there was a little confusion with that.
the premium collected will really determine which of these three scenarios that we play out at the beginning of the day. So scenario one is when you're collecting anything less than $17. Anything above $17, between $17 and $19, $20, you could do scenario two. Anything where you collect premium in excess of $20, you could use scenario three. Now, anytime we're saying these ±7, ±10, ±15, that's always SPX pricing from where your first fly started. So if your first fly started at 54.30, you're adding 7 points or subtracting 7 points to see where your next add is. You're starting at 30, your next add on the ±10 would be at 40 or 20. You're starting at 30 and you're at ±15, your next add is 45 or 15. This is SPX pricing. This is how far away the short strikes are between your two flies or two flies. So I know it can get confusing, but tell, show, next thing is watch it for a portion of the day. And this screen that I'm showing here is the captain's log. So anytime you come in, it'll show kind of what your next add point is. And right here, it shows you all the flies that we had today. 54 15s, 50 wide on the puts, 40 wide on the calls. We collected $18.90. We closed those, but we made $2.70 for them. The 5400s, 40 wide on both sides, collected $18.60. Let me choose annotate here. Say annotate. Let me pull the annotation here. So, at 54.30, we collected $13.90 for those. We flew those into the close. 25s, we sold them for $11.30. We closed them for $11.90. We took a 60-cent loss on that one. On the 54.20s, we collected $10.90. We closed those for $12.10. We lost $1.20. So we flew 3 into the close. And let me show you kind of my spreadsheet here. And so here was the P&L on all accounts. So it ranged from $8.94 to $12.83. So this shows you kind of every fly, kind of the 54 15s were up to 46, the 5400s lost 318 per contract. We flew these into the close, the 30s, they made 1,012, 25s lost 43.52, 420 lost 153, and the 35s made 540 for a net sum of the net of 1288. per contract. So, further questions? All right, well, that is an hour and 7 minutes. That was a lot. Was it like drinking through a fire hydrant?
You, Dale. That was great.
Thanks, Pansy.
Thank you very much.
My pleasure,
Thank you
guys.
so much. Thank
And
you.
I'll go ahead and I'll stop the recording.